Hello traders, welcome to the weekly market overview with me Pierre at BIFX. I hope you all had a great weekend and that you are ready for the bumpy week we have ahead of us. We're gonna take a look at those news events we have today and lots of charts as usual. And yeah, you will all have the time to ask questions at the end of the session. Can you please confirm if you hear my voice well and if you see my charts? I usually get some people in the comment section saying that the voice is low, so I will do my best to have as high volume as possible. So please confirm in the chat if the voice is good and if you see my charts. While you do that, I want you to also read the disclaimer very carefully to understand about the risk involved in trading and that these sessions are not in a signal in any way. Please guys, I just showing you the way I see the market and the way I will be trading it. Yeah, so this is not to be seen as a signal. Forex have lots of risk involved and you should know about that. So with that out of the way, why not we will start looking at the chart and see what we have for the week ahead of us. Just before we start, I will remind all of you who are in the thinking of joining the course that next course is gonna be in the upcoming 10 days or so. And I still have 8 seats left, and you can still get the offer of $200 by using the coupon code Facebook. You will learn a lot of new stuff that you never heard about out there. Just go to the testimonials and see how great everyone is seeing these courses after going through them. So if you want to invest in yourself and really take your trading to the next level, this is the only place for you to go. So get this great deal now because it will end very soon. So that's it, no more BS. Let's take a look at the news event for the next week, and as I said, it's gonna probably be a bumpy week. So we have lots and high impact news event. We will start with the real news event start on Tuesday. Yeah, we have building approvals from the Aussie, but Tuesday we have the RBA rate statement. We have Carney for the sterling speaks. We have Government Louis speak as well for the Aussie. So Tuesday already start with major events. Wednesday, trade balance, also BOAC rate statement and overnight rate for the CAD. Usually the CAD moves a lot during news event of high impact. We also have for the Aussie the GDP quarter as well on Wednesday. Thursday we have retail sales again from the Aussie and the ECB refinancing rate. No one is expecting a rate hike here. The market is totally not waiting such a thing, but what's gonna be very important is the ECB press conference. We need to hear now after we almost done the first quarter how the ECB will be looking forward and forward guidance. That is the most important thing. I think the market is not expecting any rate at all this week and maybe pushed all the way to 2020 or at the beginning of 2021. So this is going to be very important. And of course on Friday, yet again another event that usually moves CAD a lot, that is employment and unemployment rate, and of course the NFP for the dollar. Now actually this time I'm not expecting not much a longer term move for the NFP, more the release itself, like the first couple of hours or so, because I mean the US dollar employment numbers are great, and even if this gonna be a miss with like 100,000 plus here or minus there, it will not make a big effect here. What's important is still the average hourly earning. If we see this going surprisingly higher, or surprise lower, that will be the main thing to look for. And then on Saturday, sorry, we have Fed Chair Powell speaks, so be aware of that. Maybe you get some kind of gaps, but I'm not expecting much. So with the news out of the way, I know many of you used to skip the news, those who are watching the recording. Those of you watching live, you had to stick with it. Welcome Frank, Simon, Christina, DJ Liam, Merrick, welcome to all of you. Of course, we're gonna do the USD JPY, Frank, don't worry about that. So we have a new month, so I was thinking that we may take a look at some of the monthly charts, not on all of them, so it don't take lots of time here. But we will start with the Dixie as usual, and you see that February we ended up with a bullish inverted hammer. Yeah, so not much been happening here. We're still going sideways, I would say. There is no clear continuation in the trend on the monthly. In the weekly, we still see that this 200 weekly moving average coming back in play again. Last week we tested that to the pip almost before we reverse it higher. So that 200 moving average on the weekly is still something to look at. But as you see, the RSI is still like in the middle, like around 51. And that is also something that telling us we are in a sideways market. So that is the weekly. In any case, we broke this neckline. Do not forget about this. We had this double bottom, we broke the neckline, and this could be a correction lower, a 2618 trade possibly. We're gonna take a look at that on the daily. So here on the daily, we retested this key support level looking left. You know why we stopped moving lower at this level after the first touch. The second touch here made the double bottom. That happened to be at the 200 moving average on the daily, then a break above the neckline, so the double bottom is confirmed. And I said keep an eye on this 618 when we were trading to the downside, guys. So if you watched the previous weekly overview, you heard me surely talking about this. So now here we have had a 2618 trade, double bottom, correction to 618 is a 2618 trade, and the question is if we're gonna keep pushing higher, close this gap and maybe test these highs is what I'm looking for. But before that to happen, we need to establish some price acceptance in this area above the monthly pivot point, which is up here. To look at that a bit more lower time frame on the 4 hour to understand what I'm looking for, I want to actually see the price on the dollar moving above the 96.70 ish here, to break above this to really start thinking about the move higher, or a consolidation period in this zone before a break to the upside. That would be a great scenario if that happened, because now we broke this minor trend line on the 4 hour. We are trading back above the 200 moving average, which on the 4 hour, which been a nice dynamic support and resistance. I mean, not been testing to the pip every time, but above the 200 moving average is good for me. I think this is a good signal that we may keep moving higher. But of course, keep an eye on this neckline, this area here. A broken structure here, the broken neckline of this head and shoulder got retested and had a lots of issues to break here. So once again, guys, for more upside on the dollar, we need to get the price above this to then start looking for continuation higher. Otherwise, we are testing a key level right now, and we could see some kind of correction as well to the downside. What we do not want to see happening, if you are a dollar bull as me, you do not want to see a break below this structure. So mainly I'm looking for the continuation. I think the dollar is still the stronger currency than the euro, for example, at least. And this, the Dixie is like almost 60%, 55 to 60% is weighted on the euro. So that's why I'm looking for this continuation to the upside. If we look at the gold and we go to the monthly at that chart as well, we see that last month we ended up with a star or inverted hammer, if you want to call it. We trading already below the low of February, so this was some kind of reversal signal here happening at previous major level. It was not the level I wanted to see the reversal at, because I wanted this market to test that 1360-ish area before the reversal, so I didn't like that. It did move earlier, but the markets are never perfect. So if we go down to the weekly, we have a shooting star formation that is confirmed and completed. After this inverted hammer, we have last week a strong drop to the downside, breaking previous lows here. So this is a clear signal, reversal signal, which is a shooting star formation on the weekly time frame. So what are the targets, and if this will keep moving lower, that is the next question here. So what I'm looking at most interesting support level is the monthly S2 of March, which happened to be at the 38.2 Fibonacci retracement and this previous structure low. If we go down to the daily, we see it more clearly. That happened to be at the bottom of this box we had previously. So this is the most interesting level here for some kind of a bounce here, yeah, on gold. And as you see, this inner trend line is now broken, clearly broken. We broke below this low, and now we broke below this major structure. So very heavy and fast move on gold. It is already at the oversold territorium on the daily. So the question is, are we gonna keep going lower without any correction or not? But for me, any retest toward the 13.8, 13.7 area down here, previous structure, could be a possible sell level back down the 38.2 and the monthly S2. As you see here, looking at this, we broke the monthly S1 at the daily as well. So yeah, this markups was from our trading room where I send my updates, and we were talking about this range that is important range. If broken, look for retest and continuation. And as you see, we've got a pretty nice move to the downside. I said also in our trading room that if we breaks below this structure, to not see this level to hold as support anymore, because we spent a lot of time here and we were not able to break it in the past. So a break of such a level now, that means the bears are really in control, and that we're gonna keep moving lower, and that what happened. So this is how it looks like now on the 4 hour. As I said, any retest toward this broken structure, everything between 1305 until 1310 is a good level for the next leg to the downside on gold. That would be also the 200 moving average on the 4 hours. So keep an eye on this structure as well, guys. Oil also start to showing some strengths for the bears on Friday. We let's go to the monthly first. So on the monthly chart, guys, we had February breaks above the bullish engulfing of January. So it was a nice push to the upside, and we ended up closing higher than the previous months on February. But so far this month, there was an attempt to break above February high, and we could not break almost to the pip. If we look on the weekly time frame here, we ended up with a bearish engulfing on the weekly. That's why you see this candle in black color, showing that this ended to be a bearish engulfing. And Friday on the daily, another bearish engulfing after the retest of this structure up here, double top and back down to the I think what we will see is a retest of the yearly pivot point of the 2019, at least on this market. So on the 4 hour time frame, in our trading room we were talking about this previous high that is a key resistance level, which means for more upside we need to break this to continue higher, and that didn't happen. What happened was a shooting star formation on the 4-hour. The same candle that confirmed this shooting star formation closed below the trend line, so it was a clear sell signal here. And we've got a pretty nice push to the downside here, as you see. After this break, another retest, and boom, it just dropped like a stone. The next market objective to the downside, at least short term, should be the yearly pivot point, previous lows down here. This area is the next market objective. That is around the 55 area, and that is the range that you should have on your chart for next week, in case we end up going in a consolidation here inside this range. So this is the range we have right now on oil. Nothing will happen until we break out of it. If oil to keep making a deeper correction, it needs to break below this yearly pivot point, which means a break and close below the 55 level. And if that happened, then things may start looking a little bit more deeper correction on oil. Otherwise, see that yearly pivot point down here as a key support level, especially if the stock market start moving higher. Then we may see a retest here and another bounce on oil. So that is the range for oil. Euro USD, also very boring trading on this one. The monthly time frame, we see that we are in a sideways market, still a sideways market. As I showed you last week, how gold and the Euro USD correlation was out of sync. You could go back to that video and watch what I talked about, this out of sync correlation. And my expectation was, now if euro to break below the structure, that gold would have more room to the downside to start moving. So gold start already the down move, but euro still inside this range. So let's see if we're gonna keep ranging here, or if we're gonna break the highs or the lows. So as you see, the euro still in a consolidation, nothing new here. But what's interesting here, that we broke previous structure low, and it seems like we're having issues to make new highs, or at least to move higher to test these previous levels. So last week we ended up with Thursday a shooting star formation, Friday another shooting star, but it's still not confirmed, because Friday had to close below the low of Thursday to confirm the pattern. It is still not confirmed. I usually wait like 2 to 3 candles after the pattern like this. So Friday did not close below it. I still have Tuesday and maybe Wednesday. If we break below and hold below this one, there is a continuation, and that would mean the pattern is confirmed. I would love to see Friday closing already below this low. That didn't happen. So yeah, no worries. What we have on the 4-hour here, we broke this trend line. It was not the strong break, because what happened was the market going sideways. It wasn't like this break. That would be much better to just say do this. That didn't happen. So we are sitting now at the monthly pivot point support. We have some kind of head and shoulders formation here, if we look at it like this, by using the highs, and the price sitting at the neckline. What I'm expecting, or what I want to see on the euro, is a strong break here below this, the lows here from Friday and Thursday, to then look for another push lower. By looking at these wicks, it seems like the bears really defending this level here on the Euro USD. So that's what I'm looking for next week, especially if gold keep dropping. This may follow as well. So look for this break. If it happens, then we start looking to test these levels, or maybe monthly S1 as well on Euro USD. Sterling USD, still is a strong market. Monthly, February we closed above January, so we have a higher high, higher close here on this market. And yeah, the question is if we still have more steam to the upside. On the weekly time frame, we did not close above previous highs here. That would be a pretty nice signal if this candle happened to close like this, or at least above previous highs. That didn't happen. We pushed back down here, so there is no confirmation of broken major structure level here. This is a key level, and after that we had this key level that didn't get broken. They got tested, but they pushed back down. On the daily, on the other hand, we have a break above this structure. We have a break even above this high, a break and close, and then we start getting this correction. So I'm looking at this as a possible correction. We are right now sitting at the yearly pivot point and the previous structure high. This is a key level that one could expect the market to go back to and maybe start doing some continuation. As for now, so far during this leg, we're having like a couple of days correction, strong move. So the question is if we're gonna see this happening again. The thing is, next week they're gonna be pretty quiet about Brexit, so the week after that we start getting some action for Brexit headlines. So next week it is maybe a bit quiet week for headlines on Brexit. Now 4 hour, you see it more clearly here. The correction on the 4 hour, it went already to the oversold already. We do have this hidden bullish divergence happening. As you see, this low is much lower than this, while this low is on the price is still all the way down here. So this very fast move on the 4 hour to the oversold made me think that this could be another shallow correction as we had here, that this correction is a possible retest of broken structure and continuation. So keep an eye on this level. That could be the area to look for bullish evidence. Otherwise, if we see a strong break below here, then we're gonna start looking for an even deeper correction back toward the 1.3030 area, where we have the 200 moving average on the 4 hour coming, and possibly that would be the level to look for the bounce from. So bullish market, the question is where to buy. This would be the first level. Down here is the second level to look for that bounce from. USD JPY also still bullish since we had the break above this structure here. It was pretty clear that we gonna keep pushing higher. I mean, the market been consolidating here for a pretty long time in this structure. This is the daily time frame. So we got the break above previous highs, we broke above the 200 moving average, and there was nothing on the way more than keep looking to buy the dips and follow this market. We tested this previous support level, broke above it. So this is a pretty nice level where we are. We have the market right now. The 112 handle got tested last week, and yeah, the question is that it for this market? Before the continuation, that we look for a correction first. So bullish on daily, bullish on 4 hour time frame. Weekly also we have a major break above previous highs. Market objective, in my opinion, at least to reach the monthly R1 here, where we have the 200 moving average on the weekly, and some structure looking left from these candles here. So this is at least the first market objective to reach next week, in my opinion. So what I'm looking for is a level to buy from, and the last most broken structure that we could start looking at as a possible kill zone, that would be, in my opinion, back down here toward the 111-ish or this high could be also the level that need to get a retest before that continuation toward the monthly R1. So that is what I'm looking at for UJ for the next week. Keep an eye for that dip down if it happens, to buy it from around the 111. That would be great if that happens. I see 25 viewers right now. Welcome to everybody. Welcome, guys. Again, do not forget to hit the like button, please. USD CAD, a crazy move last week after this little bit of consolidation at the 200 moving average. Now, what happened on the CAD, if we look at the news calendar, we started on Wednesday with bad CPI numbers month on month. As you see, it ended up to be in red, 0.1. And another bad news on Friday. GDP month on month was minus 0.1 as well, much lower this time again. So that what happened on Friday. We got those bad GDP numbers and we've got this very strong push to the upside. So as you see, the 200 moving average still giving big trouble to this market. And if we look at this channel here, it is still intact. The price went back above the monthly pivot point and yearly pivot point down here. This area gonna be a big troublemaker for this currency pair. Weekly time frame, we ended up with a bullish engulfing, failed to make new high, so we do have a higher low on the weekly right now. And yeah, last month we had an inverted hammer here. So the question is if this market is going to test the highs of February now. So on the 4-hour time frame, we should be looking at it like this. We broke this trend line, 200 moving average down here. This neckline is definitely the level that we want to see a retest for. So next week, any retest toward this broken structure, in my opinion, that would be the area to look for the next bounce higher. The deeper correction, the better. So do not, especially for new traders, do not get confused that if you see this market going below this structure or breaking below the 200 moving average, you start chasing it to the downside. This, I would love to see the market going even all the way toward monthly pivot point and the yearly pivot point. This is actually a much better level. So if we do that retest all the way down here, your stop loss would risk to reward would look much better. Yeah, if you want to target these highs, the lower the correction, the better. Yes, instead of going long here and putting a stop loss maybe below the lows here or even below this structure, I would say to be a real safe. That would give you a 1-to-1 if you want to take the trade from only the retest here. So don't get confused. If it goes all the way down here, just be happy that you're gonna get a better entry and a better risk to reward, guys. But many times we see the market just making this correction toward previous structure and start moving higher. So keep that in mind. You should be aware of that as well. Aussie USD sitting back down at support. Even this market, let's take a look on the weekly time frame. The weekly time frame showing still pressure from the bears. Yeah, nothing has changed here. We still we failed to make new high last week. We could not trade above the highs of the week before. On the daily, we look pressured. We have some kind of what I call a continuation head and shoulder. So we are in a downtrend and we get this head and shoulder here happening like this. Yeah, a continuation head and shoulder after testing the 200 moving average, and seems like we have a lots of pressure here. We do have the neckline here. My expectation is that this market objective is willing to test the monthly S1, the body of these candles here before we had the flash crash. So I'm not looking at the wick here, I'm just looking at the body of this candle here before the flash crash as a possible market objective to reach that level. So the question is, if we're gonna see that break, we're sitting now at that support on the 1 hour, on the 4 hour. So another correction back toward the 200 moving average and the monthly pivot point, or this neckline could be a level to look for a sell and look for that breakout to happen. That would be the better idea than just going for a breakout trade and start following this, because breakouts, I do not like them a lot. Many times we have a breakout and the market push back inside, so that's why I do not like breakout trading. I like to trade the retest after the breakout happening. So to the upside, this is our resistance level. Minor key resistance level would be the right shoulder here on this market, Aussie USD. USD chief, let's go to the monthly, and what we have here is almost as we had on Euro USD, bit of consolidation still. Weekly, we still inside this range. We have nice bounces, but still we still consolidating here. Daily time frame, we had a very long consolidation here for like 6-7 days. We broke below it. My expectation from last week did happen, but it wasn't really down to the pip. I wanted to see the retest of the 200 moving average and these previous lows. That didn't happen. We moved all the way down here to then push back up. The market is now back inside that range. So on the 4 hour time frame, it looks like this. We retested the 200 moving average. We still, for the 4 hour time frame, we're still in a possible bearish continuation for this market. This still could happen, because if you look at it like this, the important highs are up here. These are the key levels, and we still have lower high, and this was our last lower low. So the 4 hour time frame, still same view, and I still think this may continue lower toward the monthly S1. If we see a break back out of the range, that may happen. And for this market to make me change my mind, I want to see a break above these highs. As far we do not have this break above this key level, then there is still possibilities for this market to keep pushing lower. So keep an eye on this. The top of this box is what will change this bias. If we break above these highs here, then we start looking for more upside. New Zealand USD, weekly time frame, almost the same as Aussie. We feel that there is still pressure to the downside, but even this market, many Forex market are in consolidation mode. So you need to have your consolidation mode trading on and take profits, and do not expect major moves yet. We're still consolidating. So even for this market, what I'm expecting is to continue doing the same until we have a breakout. So the key support level and the possible market objective is still to look for another retest of these lows down here, in my opinion. 4 hour time frame, you see it more clearly here. We had the retest of these previous highs, and we see that there is more room to the downside on this market. Even on the 1 hour time frame, here how we traded this in our trading room. After we saw the break of the neckline, then there was just one direction in this market. Every time we got a consolidation, we were trying to look for the break, retest, continuation, another break here after retesting previous highs. So if you're holding a short on this market, I think the market objective is at least to reach this previous low here. This could be a possible level for a bounce, because the last time we tested this area we got a very strong bounce to the upside. So this could be a key support level, so look for a possible bounce from this area. But if you're holding a short, in my opinion, you still safe until we reach these levels down here. If we break here, then we're gonna test this key level, another key level down here, when we left in a very, very strong fashion to the upside after the news event. So downside midterm on this market. New Zealand CAD also in consolidation mode as well. Clear range, nothing will change here until we break out of this range. So all you need to do, buy the low, sell the high until you have a breakout. I would like to see the break to happen to the downside, because in my opinion that is the better risk to reward trade. That would be perfect if the break happens to the downside. But as for now, there is nothing of that happening, so we should keep trading the range. But the break below would give us such a trade as a target once, the neckline. So that's why I like the idea that we break like this and then give us this push to the downside. That would be the best way to see this happening. As for now, keep playing this range, guys. You see it on the 4 hour. Your kilo down here, the key high of the range is up here. As for now, nothing new. Sell high, buy low. Aussie CAD, same scenario. I still see this market that may move and fill the wick here, but this one also entered some kind of consolidation zone. Key level, I'm looking for a retest of this 200 moving average and this structure and the trend line at this level. So keep playing this until we have a breakout on this market as well. Another CAD pair that looks very, very interesting is CAD Chief. And this market here, last week we had a very strong bearish engulfing candle here, about to test the 200 moving average, but it is not really respected. Yeah, we've been trading above it and below it every time. But this particular candle here, after seeing this rejection previously and getting this bearish engulfing, breaking below previous lows on the weekly, on the daily we broke also below this structure. It is not the strongest break below it, but still we closed below the structure. So I'm very interested in this market for next week. Especially if we get a little bit more of a push to the downside, showing that we really have a break here, to then start looking for a retest either toward the monthly S1, or even better if we push like toward the 200 moving average and this area around the 0.7550, to then start looking for that deeper push to the downside. First target should be down here. Next target we start talking about previous lows. So yeah, this market also pretty interesting. I think the risk to reward here is also a good one. If we want to go with like stop loss above previous highs, first target could look something like this. Second target all the way down toward these lows, we could start seeing this trouble level as our next target. So this could be also a pretty interesting market for next week. Antonio, welcome. I have short on this pair running still. Can we wait for retest on lower time frame? I'm not sure. Are we talking about the CAD Chief, Antonio? Because sorry, I was not looking at the chat. So is your question about CAD Chief or the previous chart? Yeah, I will wait for your answer, Antonio, and I maybe can go back for that chart if you're talking about that one. Euro sterling is the next market we're gonna look at, and as you know, guys, I published this idea over Facebook, over my site here on the watch list, and we were talking about euro sterling soon at key support level, and that a break here would be a possible signal for continuation. Yeah, so we've got that break now. We broke below on the daily. We broke below on the weekly as well. I would like to see the weekly close a little bit lower, but still it is a break below the structure. So on the daily we have a clear break. We've got a retest last week, and the question is if we're gonna see this happening now. What I want to see is that the RSI on the daily to move a little bit more higher before any selling. So I want the RSI to be at least around the 50 area on the daily before selling. That is the big question. We never get what we always want, but I mean, if the market give me the retest of this broken structure here, as we had previously here, that would be a good level to look for. Start looking kill zone area here for the next leg to the downside on this market. So keep an eye on this. That would be some kind of Fibonacci retracement or any confluence. So around the 618 we have the monthly pivot point here. But the retest of this structure, that would maybe give us a moving average on the 4 hour. The 200 is maybe at that time happen to be at this level. That would be great. And the same time on the daily time frame, the RSI would be a little bit more higher to have more room to the downside. But the reward here, if this idea to really continue to the downside, the main idea is now after we broke these structures, that we maybe on the longer term see this market pushing all the way down toward the monthly S1. That would give us a possible AB equals CD measured move here, something like this, to complete down here at this previous structure. We also have the extension of this first leg happened to be at 1618 down here at the monthly S2. So I'm really interested in this market to look for the continuation. We've done lots and lots of pips on the downside, so would be great to see it continue this CD leg to complete down here. That would be another counter trend trade from this level, but long time till that. For next week, keep an eye on 4 hour time frame or 1 hour time frame to give you a correction back down toward these levels. Now back to your question, Antonio, can we wait for retest on lower time frame on CAD Chief? But you're saying you have already a short on that one. But yeah, I mean, 1 hour, 4 hour, that was what I would look for the retest. But the reason I'm saying the retest toward this level, because we have also another structure here on the 1 hour time frame. You see it clearly that this structure been tested here, resistance, support, resistance, support. It's been tested many times on the 1 hour time frame as a good structure level. So the best would be a retest toward this level here to happen, and try to take a short. Another thing, if you do not get retest and the market kept pushing, what you could do always is look for some kind of small consolidations, like some kind of flag, and try to trade that flag to the downside. Try to trade the breaks of those flags, something like this, as we had on New Zealand USD a couple of times last week. So if you do not have your bigger correction and you start seeing consolidations or flags, you could play those as well, placing your stop loss somewhere above the high of the range. Depends on where that happened or where you take your trade. Your stop loss could be above the high of that range or above the high of the flag channel. Okay. Yes, so where were we? Sterling, let's go for sterling JPY, which is also, I know that many of you trading that pair. On the weekly time frame, the market objective on this one should be now to reach these highs up here after breaking previous high. We did not have a real correction yet on higher time frame, but we broke above previous high, and I don't see anything on the way until we reach this previous structure highs here on this market, especially if UJ keep going. So here we had a nice, pretty textbook flag that got broken on this market like this. We broke above the 200 moving average and we just kept pushing higher. So the market objective here, in my opinion, is to reach these highs here. But I would love to see Mr. Market going back, give us some kind of retest of this broken structure and the monthly pivot point here before the next leg higher. So that's what I'm looking for on this market on the 4-hour time frame. We start seeing the market losing some momentum. We start seeing that we do have a strong bearish divergence going on here. And yeah, I would like to see this this lower correction, monthly pivot point at least, or these highs up here could be a good level as well. But look for monthly pivot point first as a possible level to buy at. This is my scenario for this pair for next week, guys. USD Mexican, we start seeing possibilities for a break to the upside again here on this market. After retest, we could not have a break and close below these lows. We ended up with a morning star formation on this market. We closed above this channel to the downside, but still, as I said in our trading room as well, to really see this market moving higher and to trust it again, I want to see this high broken. If that happens, then we're going to test previous highs and maybe start with a deeper, higher correction on this market. But you see it here. The objective should be maybe another retest to the 200 moving average. This market been moving down for a long time now, and a correction higher like 38.2, 618 would be great, but somewhere here could be another short-term trade to reach that area after the break of this level. Same here for USD, Singapore dollar, also an interesting chart. We've been looking to see if we're gonna test these lows to look for a bounce. We didn't get that. We have a consolidating market right now inside this range. We broke nicely last week, and now we have some kind of neckline, this rounded bottom. Keep an eye on this structure. If we break above this previous highs, then you have a nice trade to the upside by the dips. If that breaks happen, look to target these highs up here. This is a key resistance level. We know that from this retest and this retest previously, and it was support many times in the past. So looking at the daily, there is not much on the way now, and this monthly R1 could be a possible market objective. So look for that break above and continuation on this market. The Dow daily time frame, we're still in a bullish trend here. Overbought, I know, and crazy, since there is no economic news that's saying that things are so damn good as the stock market is doing right now. Actually nothing. We're seeing bad economics almost everywhere, but still the stock market is pushing higher, having good sentiment about trade war and that things may be good. I do not see the trade war situation is an easy thing to solve. No for Trump, nothing for China as well. So, but that's what the market is seeing, and that is good sentiment. So all we need to do is keep following that. Key trend line, in my opinion, on the 4-hour, we have this trend line here. That is the key trend line. We see it also on the daily, of course. This is the key trend lines for the bears to keep defending. And as I mentioned last week, this was our key support or key short-term support. As for now, as far as we are still trading above this, it is still buy this, any retest to that trend line, look to buy the dips on the Dow. I do not see anything to change here unless we see a break below that trend line. As far as we are above it, last week we broke this counter trend line, could not make major highs, pushed back lower, but then to push back once again to the upside. So this 200 moving average on the 1 hour working perfectly as dynamic support. So use that as your filter on this market, and of course this trend line. Farhat, we done USD JPY already, buddy. All you need to do is go back and watch it. It was much earlier in this session, but it is recorded, so it's gonna be all you need to do is go back and watch that again. FTSE also tested back this previous key support level. I was saying last week that this gonna be a key level. If broken, then that we had to look for a deeper correction. But last week on the retest and the daily close was not below this low. So since there was no close below this low, it is still holding as support, and Friday ended up as a bullish engulfing. So there is a possibility for continuation here after breaking this trend line. We have a couple of higher lows and we closed the day above this high. So on the FTSE, keep an eye on this monthly pivot now that got broken again. If this hold as support, as you see here on the 1 hour, if the monthly pivot point keep acting as support after this break retest, then we may get a continuation toward these highs up here. So what you want to see next week, early Monday maybe, is if we're gonna break above this high here on the 1 hour, then there is maybe a possibility for that continuation for a higher retest on the FTSE. And the DAX also a very strong push last week. As you see, we are now above the neckline of this head and shoulder, above the 200 moving average on the weekly, above the monthly pivot point of this month. So everything is looking pretty strong on this market, and I think the market objective is to really make a test of this broken major structure here. That is the real trouble area on this market. So on the daily, you see we broke above this high, we broke above this structure, but still have this high got just tested without a break above it. And keep an eye on the 200 moving average. That may give us some trouble on the way up. So on the lower time frame, the first structure that we should be looking at as a possible support is this previous neckline. The strongest structure is if we're gonna test these lows down here to maybe look for that bounce from this area, something like this. So that is the short-term trade. If we get a retest on a short term or a lower time frame, I would say like the 1 hour, to look as first of this broken neckline. If the market reach this level and start giving you bullish evidence already here, there is a possibility for the bounce to keep going from here. Otherwise, your key support is still down here. You do not want to see this market breaking below this. If that happen, then you need to change your bias to maybe a deeper correction toward monthly S1. So those are the scenarios for the DAX next week. First, this neckline support, this down here is the key support level on this market. And the copper for Mr. Liam in our trading room. He'd been trading copper, so I have it on my list as well, because the main reason I have it, that we are testing a pretty nice flip zone here, as you see on the monthly chart how important this level is, and on the weekly you see it even more. We broke above the neckline, double bottom last week, and we're reaching this key resistance once again. RSI at the overbought, and there is possibility for a short-term short trade here before a continuation back to the upside. So my expectation here now, after this little consolidation, especially if we break below it, that copper may move toward this broken structure, at least as a possible market objective now, since we broke above the 200 moving average. So there is a short-term counter trend idea here to then maybe look for the bounce from that retest on this market. The 4-hour time frame, we had this consolidation going on now, so it is this gonna be a pretty easy trade. If you see the break happening below this, like on the 1 hour, then you are good to go. You see here we have the 200 moving average on the 1 hour acting also as support. Pretty clear range. What we should be looking for is, if we're gonna break, to then move this. Pretty nice trade, good risk to reward. If that retest happen, you should have your stop loss above the highs, and target is of course this major broken structure. So this would be the short-term counter trend trade in this market, looking something like this. Yep, so that was the last market for today. As usual, couple of minutes for questions or any charts you want me to look at. Farhat, I'm short USD JPY, guide me. I don't know what you want me to guide you on, buddy. I don't know where you took the short as well. If you watch this video again, I am bullish on this market. And what I'm looking for here is now that we do have this bearish divergence going on USD JPY, and that we reached the 112 and got a little bit rejected. What I'm looking for is if we're gonna see a deeper correction, to then buy it from around the 111 area to the upside. So yeah, I am bullish actually, so that is what I'm looking for, the retest on continuation, but there is a possibility for a counter trend if that correction happens. Stephen is asking, what is your take on Euro Aussie, Euro New Zealand and Sterling New Zealand? That was many charts, buddy. Let's start with Euro Aussie. Euro Aussie, we are testing a key level here, as you see, previous highs. This is previous high, and this, and it was acting as support. So it is a key level that been testing. The 200 moving average on the daily is going like flat here, but we are trading above it, so one could say the longer term should be bullish. Pretty easy chart here. We broke higher last week, but not the strongest break. I think if we see another push higher, then this could be a broken structure, and the market objective could be to reach monthly R1. Anything above monthly R1, that will open the door for another deeper correction toward these highs on this chart. So yeah, you need to see that break happening and that the market is holding above these levels. Otherwise, there is a risk to see this market pushing back inside this range and keep doing this consolidation once again on Euro Aussie. Now Euro New Zealand, I think we are looking at a similar chart. On the daily, we are testing a key level here. The trend line, you see it here clearly, happened to be at this crossroad with this horizontal support and resistance level. So if the break happens here above the trend line, there is a possibility for this market to continue to the upside. As you see here, it is a clear structure. I would say still not sure about this until you have a break above this key level. Even a little break above the trend line is not enough. You want to see the market breaking above this structure to then start thinking of some kind of continuation to the upside. Maybe toward the yearly pivot point could be a possible market objective, but all that is still if we break a strong breakout above the trend line and above a previous high. And you asked about sterling New Zealand, so let's make that chart as well. Here we should be bullish on this market. We broke above the 200 moving average, above yearly pivot point and monthly pivot point, and we also broke above this previous high. That make me bullish on this market. And since the RSI is at the overbought, I want to see some correction back down toward the yearly pivot point and the 200 moving average. Looking left, the neckline here and this previous support area, I do like this market to give me that correction back down to then maybe look for the buy. So keep an eye on this yearly pivot point as first level of structure to look for possible bullish evidence. That would be a retest of this broken structure to then start looking for a bullish evidence and continuation. That my view on sterling New Zealand. Okay guys, so I don't see any other questions or charts. Thanks a lot. Once again, share the video. If you're not subscribed, do subscribe. If you did not hit the like button, shame on you. I've been doing this for a whole hour now, working hard for you. Okay, so thanks a lot guys. See you next week. Happy trading, and be careful, lower your risk, and always plan your trade your plan. Bye bye.